All right, everybody, welcome back to Matt Money. So today is one of my favorite videos. We're going to be walking through the income that I got from my non 9 to 5 job in the month of May. So I love this time of the month, the very beginning part of the month, because everyone's starting to release these videos. And it really allows you to kind of look at other people's portfolios and really see their perspective on things and see what they're kind of doing and see if you need to tune up on your own a little bit. So this is my rendition. Go through the May portfolio. So just to give you a quick overview, we'll probably talk about the three most common sources of income that I have from the portfolio. One of which is dividend income. That is kind of separated into a multitude of different things. I mean, you can consider it partnership income from real estate investment trusts that I have, or private real estate investment trusts that I have, fundrise, normal real estate investment trust, stocks, or anything, and I guess normal savings interest income coming from a savings account. And then you also have the Shopify, and you also have the YouTube income that comes in here as well. So obviously, the biggest at the moment on a monthly basis is mostly, I would say, the dividend income. So I generally highlight that the most. That's generally speaking why most of you guys come to the channel, is to look at that. But I also wanted to show you guys the YouTube aspect of things and also the Shopify income of things, just so everyone can kind of see the other streams of sort of income. So we ended up the month with $1,950, which is pretty good. We'll see how that compares to the other months in the year so far, but June is going to be a big one, I think. June is, generally speaking, my better dividend month, and we can kind of get into that in a moment as well. So just hopping into the portfolio, we obviously have the overview up here. You guys are familiar with the tracker, and if you're not, feel free to look in the description. It kind of gives you a little bit more in-depth detail about what the tracker can kind of provide. But basically, this is where my overview is. If you just kind of scroll up and to the left, you're seeing the total portfolio value has hit another little milestone for me, $450,000, 300,000 of which is in the dividend portfolio, 143,000 of which is in the 401k. The 12-month forward income, unless somebody cuts some sort of dividends, is about $14,693, which is awesome. That does not include Shopify and YouTube income. We'll get into that in just a moment. So then hopping over a little bit into the pretty table that's here is converted into these pie charts. So the two pie charts on the top are basically separating things into sector. On the left, you're seeing income by sector. On the right, you're seeing allocation by sector. So starting on the right hand side, this is basically the current value of the positions that I have. So it's not the cost basis, right? So the current value of everything that I have in energy is about 14%. Financials is around 20%. It's continuing to grow as financials kind of come back to life. Real estate's up to 16, and then everything else is a little bit smaller. So you have consumer staples, which is at like just under 9%, healthcare is just under 8.5%, industrials is actually getting close to 10%, which is pretty surprising because I did not think that, probably because I bought some cheap ones, relatively discounted ones, and they've continued to grow a little bit. Information technology is about 5%, materials 3.5%, telecom just under 6%, and then cash is at 5%. So those are mostly in line with what you would expect for the income, but the energy is a little bit higher just because the yield that you're getting out of the energy sector is bigger. So everything else is relatively in line. The things that do get kind of impacted, though, is like healthcare. So my healthcare positions, generally speaking, are a little bit lower yield. So think of like your Johnson and Johnsons of the world. But my Johnson and Johnson's partially offset by my AbbVie position. So that is what it is. So then the materials also kind of gets impacted, and industrials obviously gets impacted as well. The industrials, obviously, you have a pretty big position in Boeing, and then you have Caterpillar, which is a lower yielder than I guess the majority of the portfolio. But overall, you can kind of see that the yield on cost for the portfolio is still coming down as I continue to invest in some of these other companies, and the dividend yield is definitely coming down because some of these companies are now increasing in value again. And so that's pretty cool to see. And I think this yield on cost will continue to come down because I'm now starting to invest a little bit more into, I guess, not international, total stock market funds and total really technology funds with QQQ, which we'll touch a little bit maybe on in a moment. But being able to kind of contribute more to those will kind of bring down the yield on cost through time. But I think that just overall, I will be continuing to contribute to individual stocks. I do still have money that I will be contributing to that, and so it is what it is. So actually going to the what actually we got in terms of dividend income for the month of May. So we got $859 from dividends total from the month of May. YouTube was around $274. Shopify was around $816. So Shopify has been steadily increasing throughout time. So we're pretty happy with that. We did have a dip here in February just based off the fact that we had a little hiccup that we kind of had to fix. And now we're back up and running. We did have about a 30% increase from the month of April. So things are going relatively well with that. We have the second website up and running as well. But we'll probably touch on the big main Shopify income grabber. Big drop off on YouTube income. I was a lot more active in April, and I did have a couple videos with a lot of traction. So there was an oil video that had a lot of traction, a Grant Cardone, two videos from that got a lot of traction and got a lot of ad revenue from those. And so without those, and also being, I guess, slacking on the amount of videos that I've been putting out in May, and also trying to start the second channel, which we'll probably touch on in a moment, that also is kind of putting a drag on the total amount of revenue that we're kind of getting. So I'm putting definitely more FaceTime into YouTube as a whole, but at the same time, it's on a non-monetized channel. And so that kind of impacts things a little bit, not a lot, but that takes away a little bit of time. And also, trying to put a little bit more time into the websites as well, writing blog posts and things of that nature. So going into the actual dividends, so the $859 that I got, and then we can dive a little bit more into YouTube and Shopify. AbbVie was always one of the bigger positions that I get in May, so $138 from AbbVie. Then you have BP Midstream Partners, which pays me about $173. Caterpillar, which is a $70 payment, which is awesome. I reinvested that, so it should be jumping up to a $78 payment every quarter now. CQP, which is Cheniere Energy Partners LNG, that paid me about $83 this quarter. Kinder Morgan, which is my last payment from them, $31. I sold out of my Kinder Morgan position just to try to consolidate some of the portfolio. Main Street Capital got my $29 position here. Monthly income coming from that. You had one of the smaller payments that we're going to have from this point on. Had this at a $34 payment, but jumping up into next month, we're looking at about $58 every single month, unless they cut the dividend or grow or shrink the dividend. But maybe this will actually continue to grow if I continue to buy more shares of Realty Income Corp. You did see I did get a Phillips 66 payment here in June, but that does not count towards my May dividend. You have your normal Stag Industrial $18 dividend payment, which I have reinvested, so expect $18.07 and continuing to grow as we continue to reinvest. AT&T, $116. This is going to grow to $156 every single quarter because I did add more to the AT&T payment. So Verizon, $67. I have been wanting to add to Verizon, but I haven't really found the best price. So I don't know if it's really me being picky or what. But at the end of the day, I do want to invest a little bit more into Verizon, and I need to just suck up, I think, and buy it. Wells Fargo did not pay me in May, but I did get my $250 dividend payment this morning, which was nice. Bought myself about 10 more shares of Wells Fargo, increasing the dividend that I should be getting by about $5. So that's pretty cool to be able to instantaneously on a quarterly basis increase your income by $5 or $20 every single quarter if you look at it annualized. So that should be cool. And going forward into next year, you see that it used to be 1,000, now it's 1,020, which is cool. Hope that kind of continues in the future. I do have, maybe this 41 cents can kind of go away. I didn't necessarily keep track of that. You do have this Main Street Capital in my Roth IRA as well, which pays me about $33 or so. And don't know if I'm reinvesting that. I don't think I am. So I think that just went into the cash account. And then you also have Verizon in the Roth IRA as well, which came out to be $21. Continuing to scroll over. You are seeing O Realty, which I didn't check, but it's probably $1.24. It's not really changing all too much. I am reinvesting this one, so maybe it went to $1.25 with everything. Clorox is another one I didn't check. I do reinvest this one as well, but I didn't really expect too drastic of a jump from Clorox, so it's just a $5 small little payment here. AbbVie, I actually got locked out of this account, so I need to figure out a way to get into it. But I have another AbbVie position that used to be in my computer shares account, and they transferred it to EQ Shareholder Services. So that is this AbbVie and General Mills position here. And same with this PG position here. All these little guys are kind of stuck up. But even if you were to say, okay, well, how do you know they're real? You didn't go and record them. It's $11 out of the 800 and some, so I'm not too concerned about it. And then, of course, Cardone Equity is not paying me again this month. We can expect our payments to kind of resume in July at the moment, but we are waiting for the next couple days of June rents to kind of come through to see if that is the case. But so far, so good with these. I think that they will end up paying in July. So I will get the 56.25 that I was missing for these 3 months. So it should be over $200 in payments in July if they were to resume it. If not, if they were to say do it in August, I should get $250 in August whenever they decide to pay back, if they think that everything is okay and they don't need that extra money to make sure that they have everything. This personal savings is continuing to grow, so it was around 10,000 or so last month, but that is partially offset by the fact that, and it went from 10,000 to about 14,500 ish, but that's offset by the fact that they lowered the interest rate that I'm getting from the account, and so that got impacted. So it was at 1.7 like just like a month and a half ago, and with that now I think it's down to 1.3 or 1.2 or something like that. So I'm still able to kind of capture that arbitrage, which is nice because everything's kind of cut almost to zero around the globe. And so Amex is being nice to kind of lower it slowly over time. So went from 26 to 23. Next month it's going to be 18, just based off the fact that an additional interest rate cut. So should be expecting this one here in on the 10th, I think. And so that's how that kind of works. So looking specifically at the month over or year over year growth that we had for May, so we actually increased 105% from last year. So 2019 made $418 in dividends versus 859 in dividends this year. And just from the stocks that I bought over the past couple months, we're looking at approximately $951 in 2021. So even 2021, if these don't cut any dividends or anything like that, or before any sort of dividend raises, we're looking at close to 10% increase before we even get into next year, which will be good. But I am excited about this 105% increase, and same with July. July looks like it's a 109% increase or so, and that's kind of what I'm looking for, right? I'm looking for that 50% or so every single year for this year and next year, going into 2021, trying to get that dividend income to 21,000 for next year, trying to get it to 14,000 for 2020. I don't know if I'm going to be able to make it, guys, to be 100% honest with you, because if I were to scroll all the way to the left here, those dividend cuts did actually hit me pretty hard. So Royal Dutch Shell, I did get all the way down to like 13,000, 13,100 for the year. And I have been continuing to try to invest, but I am consolidating some of these positions. And some of them are in higher yields and then going into stuff with lower yields. So while I might be selling and consolidating some stuff, I actually am losing a little bit of income, which is fine because I know that I'm kind of shifting the strategy a little bit. And I know the strategy was like all dividends all the time. But as we kind of jump into the Shopify and YouTube aspect of things, you can see that that's kind of growing a little bit faster than I could have expected. And so that might help out a little bit. Um, so while I'm probably not going to walk away with the 14,000 in dividends for 2020, it'll be offset by, say, some of the YouTube income and the Shopify income to hopefully bring this number up to at least maybe 20,000 or so. So I'm not including any of the other months here in Shopify YouTube where I do have it forecasted out for the dividends, because those are a little bit more secure at the moment unless they sort of cut them. So if I were to kind of just double these payments, hopefully, you could say that it's another $4,000. So that'll get me close to 21,000 or so in terms of total income, kind of coming from secondary sources, which is kind of cool. Dividend income, YouTube income, Shopify income, and so far looking forward to that. Now, actually looking specifically at where we're at. The actuals were at 48% or so up from last year. So last year we walked away with 8931 in income. We're at 13,300 or so right now. That's a 48.8% increase. The goal for this year is 57%. So we are still a little bit away from that. In order to meet that, I need to add about, so in order to get that, I need to add $700 in dividend income, and I'm already halfway through the year. So I need to add 1,400. So I need to add close to like 30,000 or more to be able to even get close to this 14,000. Because obviously, to get to close to $1,000 in income, if you're investing at 4%, you need $25,000 invested. And of course, you're only going to get $500 from that because we're only halfway through the year. So if I need about $700, I need, just over $30,000, right? In terms of needing that additional $700 in income, I'm going to need not just 25,000, probably a little bit more than that, unless I'm investing at a 5 to 6% yield, and then it might be a little bit easier. So I am going to contribute for sure, but a lot of my contributions are already kind of preset for, say, Robinhood or M1 Finance or Fundrise, and unfortunately, a lot of those at the moment are kind of like, you know, $500 here, $1,000 there, and it's through the next couple months, right? So it's not lump sums right now. So I'm just kind of giving a forewarning. Sometimes I do surprise myself with the later half of the year, but so far it's looking pretty rough. I mean, if I wanted to go into the deep cash stacks and really just try to unleash a decent amount of capital, because I do have about 15,000 in cash, kind of just sitting on the sideline. If I wanted to, I could just kind of release that, and that would be able to help alleviate it. But I'm not just going to chase yield for the sake of chasing yield. I'd rather just kind of really pick my battles on a month-to-month basis, make small decisions, and the big decisions will kind of get made, and the big progress will kind of get made by a culmination of those small decisions. Um, so yeah, let's just hop a little bit more in detail into the Shopify and YouTube of things. If you guys already have not subscribed to our new channel, Passive Income Educator, I try to do about 2 question and answer sessions a week. And so if you guys are interested in having, let's say, like an hour, hour and a half long sort of Q&A with me, where you can ask me anything about, say, Cardone Capital or Shopify or starting a YouTube, or what kind of dividend companies am I investing in, which is probably, I would say, the majority of the questions. I do this live twice a week, and so it really allows you to kind of connect with me. I literally don't like ramble on about anything or try to sell you anything. I literally will like pull up a spreadsheet, or I'll pull up like a website, and we'll just talk about it. And then after I'm done kind of talking about that, I'll hop back to the chat, see what questions are kind of coming up. And generally speaking, they're about hour to an hour and a half. I did do a 2.5 hour one not too long ago. So have kind of been trying to focus a lot on this. You can see I kind of cut them down into little clips as well. And so if you don't necessarily want to sit around for, say, a 42-minute live stream, or an hour live stream like you're seeing here, with a horrible face, this one has me with my eyes closed, then you can just wait till I kind of cut it down, and then you can kind of utilize it that way instead of having to wait. But all you have to do is subscribe to this new channel. So going into the actual Shopify income here, so we could finish up. So I do own this 50/50 with my buddy Kyle from Passive Income Investor. So this particular website was about $1,700, and then we did have a secondary website which was up about $100 or $150. So that's starting to get some income as well. And just from this website, you can see we're up about 32% month over month compared to April. So far so good. 20% increase in people that showed up. So far so good. I think that has to do with a little bit of the blogs that we're writing and those kind of catching on, which is good, right? I'm happy with that. But I think what this ends up happening is we take out the expenses, obviously, because they do cost a little bit of money to to run these sites, not a lot, and then we divide it by two, right? So I walked away with over 800 bucks. So 1,700 bucks. Obviously, you did get a little bit of money from the other website as well. Take away any sort of expenses, and then bing, bang, boom. I'm walking away with 800 bucks. Cash flow, of course, that's not completely passive. I do have to answer some emails every once in a while, help fix bugs if those come up. But overall, things are going relatively well. I really hope you guys are enjoying the spreadsheets and the conversations if I've had any with you. And I'm really not doing it to make the money. I'm really hoping that it's bringing the value to you guys. And then obviously that comes back to me in monetary reasons, right? So that's the way I kind of look at it. The more value I'm bringing to you guys, the more ways I'm helping you guys shape your portfolio, focus on portfolio management rather than, say, dividend tracking and all that stuff. Hopefully that stuff gets automated, so now you can think about it as more of a portfolio manager. Do you have enough in financials? Do you have enough in energy? So that's the way I like to show that. So $816 walking away from Shopify in the month of May. Um, and so, yeah, so far so good with that. And then hopping over to the analytics associated with Map Money account. So revenue went down, right? So last month it was about $550. I did have like a $200 video that I released last month that did relatively well. That was a Cardone Capital video that attracted a decent amount of attention. So I walked away with an additional $200 associated with just that video alone. And so looking specifically at what's going on for this month, 33,000 views. So awesome. Thank you guys so much for watching the videos. I recognize that I didn't put out nearly as many videos this month as I have in the past, but I still did put out a decent amount of vids. Did some live streams as well. So hopefully you guys are enjoying the videos. I know some of them are a little bit interesting and they're kind of all over the place. YouTube doesn't really like that sometimes, but it is what it is. So still was able to get $274 in income, just under $275. 382 of you guys additionally subscribed. So hey, if this is your first kind of portfolio overview, welcome. I try to do these every month. So hopefully if you find this useful, you can share it with friends or family. So that's relatively it, guys. I mean, I don't really have too much to really say. I did have a pretty good month overall. Um, Working on things, and the portfolio is looking pretty good. We're up to over $450,000 now and continuing to grow every single month. But yeah, let me know what kind of videos you guys are looking for in the description of the comment section of the video. I'm gonna probably try to make a fundrise video when I get some more details about Cardone Capital. I'll be sure to do that as well. And I'll probably just continue to make more videos about M1 Finance as well, because I'm kind of taking a different strategy compared to the individual stock investments like I do in the majority of the video. So you can see ETFs don't even show up really on this graph. You can see at the moment they're like 0.3% of the income and just over 1% of the entire portfolio. So only 1.2% yield by sector. So in grand scheme of things, ETFs are pretty low on the totem pole right now. And I wish I could figure out a way to say like, okay, this ETF is 46% technology and build that in to the sort of pie at the moment. So unfortunately, it's like if once ETFs kind of take up a bigger section of the pie, it's gonna be like, okay, well, here's my individual stocks, here's my ETFs, and individual stocks are separated into financials, this, and that. It's like, well, what about your ETFs? But anyway, don't want to go off on a tangent about that. Hope this video finds you guys great. Hope it finds you guys well. And I hope you guys have a phenomenal June. I'm looking forward to June. I'm looking at about, just from dividend income, over 1,500 bucks. It'll be my biggest dividend month to date. So excited to bring that to you guys at the end of this month. And yeah, that should be a good time. And then hopefully a little bit later on down the year, we're looking at a $1,700 month as well. And it's only going to get better from there as things continue to get better and bigger and more investments going into the portfolio. Next year, hoping to get a $2,000 month, just based on the fact that we're going to try to get to $21,000 in dividend income in 2021. That should be buck wild. Hopefully we can get close to 25 to 30,000 in total income coming from all the different sources. So anyway, thanks guys. Make sure you hit that subscribe button if you haven't already. It means a lot to me, and hopefully I'll catch you guys on the next video. Cheers.